Hey everybody, it's Daniel here from IFRS. Hope you're all doing well. So, Friday, August 25th, 10 a.m., you've got the Jackson Hole event. Most importantly, Jerome Powell, if you follow the U.S. Federal Reserve chair, he's speaking out at that time at 10 a.m. Going to be really interesting to hear what Jerome Powell has to say in terms of monetary policy. Now, Jackson Hole is an event that happens every year, usually at the end of August, where a bunch of central bankers come out, talk about monetary policy. You're going to hear from the ECB as well. You're going to hear from many central bankers on monetary policy and their take on interest rates, where the markets might be heading towards, and etc., etc. Now, focusing on Jerome Powell, it will be interesting to see whether he uses Jackson Hole event as an event to start to play out the scenario of the end of rate hikes. All right, so a lot of people are thinking that Jerome Powell is going to start to use this event to lay out that, hey, we're going to now get into pause mode. Although obviously it's probably not going to be that blunt or obvious. Obviously he's going to play out and saying, hey, we're still data dependent. We still can raise rates if inflation's coming down. We need to keep rates higher for longer. So that's an obvious thing that they're gonna keep that tone the same. But when it comes to further rate hikes, leaving also the door open to that they are data dependent and also that this could be the pause. Again, still need to see September's data, how November plays out, October, November, December, and so on, right? Obviously, things can change. If oil starts spiking all of a sudden, that's why I said also watch oil. It's got that triple top as well. It's a little bit coming down, right? It's fluttering around that triple top. If that breaks, goes to $100 a barrel and so on, definitely that changes things completely. But I don't think you're going to get the pivot, which is the rate cuts, unless something really happens, right? The credit event or whatnot. But I don't think you're going to get the rate cut, the pivot to happen or to be signaled in that event, right? So at most, maybe a pause, watch and see how things are, keep rates higher for longer. Could that fuel the equity markets going higher? Sure. Also, it all depends on how dovish Powell sounds, right? So now in the FOMC minutes, they did talk about saying that some members feel that they want to keep rates higher for longer, maybe are concerned about inflation creeping up, so they need to continue to fight and battle inflation with higher tightening. On top of that, there was also a little bit of information about the equity markets as well. So it was very interesting to see that in the minutes they discussed that the valuations, that the fact that the stock market has moved up quite a bit, they signaled some risks of maybe a turnaround in the equity markets, right? And of course, they also signaled that, hey, probably they don't see a recession this year. I think it was JP Morgan also saying they don't see a recession this year. I completely disagree. Maybe not this year, but probably next year that something would show up, right? Something is coming. Because if you look at, again, the pricing in the bond market, you're seeing that the markets are expecting rate cuts early of next year. That means that something has to happen, right? We're not going to get rate cuts early of next year if nothing happens, right? There's got to be something that causes massive layoffs, there's some sort of black swan event or credit event. There's got to be an event that causes them to do something. If there's no event, then forget about it. You're not gonna get any rate cuts, and they may keep rates higher for longer. Right, even as you approach to the 2%, don't forget that core inflation also needs to come down, and it's far from the 2%. I think it's 4+%. and that also needs to come down. Housing, shelter, etc., etc. There's still a lot of components out there that's a problem. We talked about inventory issues, China, foreign investors, overseas firms, all contributing to the supply chain issues, the inventory issues, right? So it's not done. we're not done, and this is not the end, and we can start cheering. And just like I said in previous videos, don't think rate cuts is a good sign. Sure, medium, long term, it's a good sign in terms of stimulating the economy and the markets. I totally get it. But I mean, at the moment of short term, if when rate cuts start to happen, right? Just like how in China, when they had rate cuts and then you had Evergrande, file for bankruptcy, etc., etc. You look at their economy; it's not doing well in China. So that's when rate cuts would come in. So same thing in the U.S. or some Western countries, rate cuts would come in because there's pain, there's problems happening. Okay, so if there's going to be some sort of issue, and if the bond market's right that there's going to be rate cuts coming in early of next year, then that means that there's going to be some sort of credit event, something happening, right? And time will tell. So anyways, for the Jackson Hole event, it's going to be really interesting. I think my take is I think Jerome Powell is going to strike a balance of hawkishness and dovishness, so you kind of get a neutral. I don't think there's going to be massive, big clues other than Jerome Powell saying we need to fight inflation. There can be risks of, inflation picking back up, keeping rates higher for longer, right? Even if they don't hike, the pause, keeping things tight. Banking sector is fine, no recession, growth is fine, don't see any problems in the job market, etc., etc. Bring inflation down, and we may not have to tighten that much. So you kind of get a balance, and as expected. How the markets will react, we'll see how the equity markets and bond markets react. It could also be an event that, doesn't mean much, right? Like we've seen in previous talks from Jerome Powell that didn't give us that much, right? Like it could be that September where we hear from Jerome Powell actually tell us something about the rates or the trajectory or the markets. I think then something interesting will come in. But anyways, it's a very important key event as we approach the end of August. I know a lot of people are on vacation and whatnot, but definitely you want to keep an eye out on what Jerome Powell is saying and what also other central bankers are saying in that event. So let me know what you guys are looking forward for that event. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.